Hey, are you wondering about the differences between hard money investing and traditional investing? In this video, I'm going to break down the difference between the two. I'm going to give you some major differences and give you a better understanding of how hard money investing works. Hey, if you're interested in the hard money lending business and you haven't subscribed yet, please subscribe now and hit the bell so you'll be notified every time we come out with a new video. Thank you. My name is Rodney Miller. I'm a hard money lender based out of Oklahoma City. I loan in Oklahoma City, Tulsa, pretty much the whole state of Oklahoma and the Dallas-Fort Worth Metroplex. If you're interested in hard money and a hard money lending business, you've come to the right place. Hey, I've run a hard money lending business now full-time for about 4 years out of Oklahoma City. I got about $4 million out on the street. About half of that is my own money. The other half is investor money. And I also invest passively in other hard money lenders deals. So I want to talk to you a little bit about how passive investing in hard money loans is kind of compared to traditional stocks, bonds, mutual funds, that kind of stuff that you typically see out there. So short disclaimer, I got out of the stock market around 2000. So I don't have any recent experience in the stock market, but I don't think it's changed a lot. I haven't been in stocks, bonds, mutual funds since around 2000, 2001. But I kind of know how it works. I've invested in it. It's not too complicated. So we're going to compare that with hard money lending because that's about as basic and traditional as you can get. Not lending, but the stock market. Now, to be clear, I am not talking about running a hard money lending business. That is an active business. That would not be passive. That would not be, in my experience, an investment. That's more running a business. I'm talking about passive investing. Like you find a hard money lender and you invest in their loans and they run the business. So I want to make that very clear. So let's just start with an example. So I make a loan to a borrower, a real estate investor, at 13% interest. And I'm the lender, I'm the business owner. And then I can come to an investor, let's say you're the investor, and I tell you, hey, Mr. Investor, this guy's paying me monthly 13% interest. I'll pay you 10 of that and I'll keep 3 and I will run the business and make sure the payments come in and handle defaults or late payments and all that. That is a passive investment in a hard money loan. Okay, let's get to the comparison. Okay, so first off, the main thing that stands out for me when I compare like the stock market, mutual funds to investing in a hard money loan is there's no fluctuation. Like in the stock market, things fluctuate. You go up and down with the market. You just accept what the market does. With a hard money loan, there's a set rate that you are guaranteed to be paid, well, not guaranteed, but that you are promised to be paid by the hard money lender. And let's say it's 10%. The payments come every month. And you get your 10% check. If you invest 100 grand, you get 10% of 100 grand. If you invested $50,000, you get your 10% annualized, monthly payment on $50,000. With the stock market, it's up and down. You don't know what you're going to get. It just depends on what the market does. When you invest in hard money loans, your money is not exactly liquid. These loans are usually 6 months to 12-month terms. They can go longer, they can go shorter, but average, if you're doing fix and flip loans to real estate investors, your money is going to be tied up for 6 to 12 months and you will get paid off when that loan pays off. But before that, your money is kind of tied up in the loan. With, stock market, mutual funds, you can just pull your money right out. Not the case with lending. Another thing I want to cover is that your payments are not guaranteed. Now, I know you're not guaranteed in the stock market either. So that's really not a comparison, I guess. But when you invest in hard money loans, there's no guarantee you're going to get paid on time. Sometimes payments come in late. Every once in a while, something goes into full default and you've got, your payments, your monthly payments stop. You will get paid down the road when everything happens. If there's a foreclosure or a deed in lieu of foreclosure, whatever, your hard money lender that you've invested with will handle all that situation and you will eventually get paid. The good thing is, like with our investors, you invest, you get paid 10%, but if we have to go to full default, you get 14% and you just have to wait for your money. You have to wait until it pays off. Okay, another big difference is if you invest in the stock market, you go find a stockbroker and he puts you in mutual funds where you don't really have to learn that business. It's pretty easy. They spread your money out, whatever, dollar cost averaging or whatever. If you're going to get into investing in hard money loans, you're going to have to do a few things. It's going to be more active up front because you're really going to have to kind of learn the business. So you're going to have to learn terminology. You have to learn how we evaluate these houses, or these properties. How do you evaluate deals? You have to learn loan to value. What does loan to value mean? ARV, after repaired value. There's certain terms and things that you need to learn. How are defaults handled? If I invest my money with you and the borrower stops paying, what happens? What happens to my money? What happens to my monthly payment? When do I get paid? Am I guaranteed a payment? Am I not guaranteed a payment? There are things that you'll have to kind of learn about how the business operates and works. And that's why you're here, man. You're going to learn a lot on this channel if you keep watching. We're going to teach you all this stuff. The next difference is that you're going to need to vet the owner of the hard money business that you're investing with. So, there's a guy out there making loans like me to these investors. You need to make sure that the company you're investing with, the operator that owns the hard money lending business, is a solid person, runs a solid operation. And you can ask questions like, how long have you been in business? How many loans have you made? How many loans do you have outstanding right now? How many do you have in default? How many you're paying on time? How many are paying late? You can ask for some references, talk to some of the lender's clients and make sure they're happy and they've been dealt with. Eventually if you've invested enough loans, some are going to pay late, some might go to default every once in a while. And you want to know how that operator handled that default. Did he go quiet on the investor, or was he very informative and keeping them in the loop on here's what's going on and here's where we're at in the process? And so that's really important. So you got to vet the people that you're dealing with. That takes a little more work up front. If you invest in stocks and bonds, you don't really vet those guys. I mean, they're all doing the same thing. It's a commodity. They're putting your money to work in the stock market. Big deal. So I would say with hard money lending, there's going to be more work up front. So let's just get that out of the way. Another big difference between traditional investing and hard money lending investing, or investing in hard money loans, is that if you're going to use your retirement account funds, you're going to have to transfer from a traditional IRA or 401k into a self-directed Roth or IRA. So there are special custodians that work with alternative investing. And so, your traditional IRA that you rolled over from your last job or whatever, they're going to give you options of the basic stocks, bonds, treasuries. But if you want to get outside of that, you're going to have to get to a self-directed IRA custodian and somebody that specializes in investing in alternatives, real estate, gold, silver, crypto, and notes and mortgages, and of course, debt like hard money. And these guys will hold your money and they'll help you invest in these alternative assets. I've worked with several self-directed IRAs. I've moved my account a few times. I got one I really like. If you're interested, I'll put it down in the show notes. It's directed IRA. So have you ever invested in a hard money loan? If so, let me know your experience. If you haven't, let me know why not. I'm curious to know. Put your comments below, please. And one last point I want to make about the difference between traditional investing and hard money lending investing, or investing in hard money loans, is you're probably going to get hooked. It's pretty cool to get those regular payments, double-digit returns. And when a loan pays off in 9 months, 12 months, I can almost guarantee you're going to want to jump back into another loan. I don't know many investors that don't go straight into another loan with hard money lending. It kind of gets in your blood. It's fun. It's just a different way of investing, and it's a pretty good rush when one pays off, get all your money back, and then you can go back into another loan. So be careful. You might get hooked. Hey, thanks for watching. I hope you enjoyed the video. I got a ton of free stuff down below. If you would check it out. For borrowers, we have free reports, how to flip a house, how to guarantee a hard money loan. If you're a property, you need a loan, you can go down to our link and we have a loan application there to go straight to our back office, and we'll take a look at your loan application. If you're an investor, we have a free co-investor brochure explaining our investor program, and you'll learn a little more about the whole investing process. If you want to invest in notes or hard money loans, go check that out. It's down below. We have a link down below. Hey, if you enjoyed this content, you might want to watch this other video, how I underwrite hard money loans, learn the basics. It'll give you some more good information about the hard money lending business and how we underwrite loans. And once again, please like and subscribe to this video. You watched to the end. I appreciate it, and appreciate it if you would like and subscribe. Till next time, Rodney Miller, Hard Money Partner.